Anshul Shaigal joins us now. And hello, good afternoon. Come on, market's nearing an all-time high. You got to smile and do something better.
We can analyze the markets till the cows come home. But the reality is markets are doing what they are because Aisha is wearing that jacket. And we need to crowdfund 4 different shades of green for her so that on all 5 days she can wear green jackets.
I'll also start wearing green jacket. You
But
can.
Trust me, if that was a thing, like Nikun said, he could wear a green shirt, tie, and maybe a turban as well. I don't know. Whatever it takes.
Anything for markets to.
Whatever it takes.
Anything for markets to go higher. Okay, Anshul, how about you wearing a green jacket next time? That will be a clear endorsement of your thoughts.
if only I was so glamorous. it doesn't suit me. I could do that, but it doesn't suit me.
Come on, fund managers, एक color उन पे हमेशा suit करता है green. Doesn't matter. Even Buffett loves the green color at 92.
Correct.
Okay, markets now.
No,
All-time high.
yes.
Is it in sight?
You see, there are, as I've been saying for quite some time, the market makeup has been that there is a lot of cash lying on the sidelines. People have been quite, wary of the uncertainty, and so they've been holding cash. On the other hand, you have FIIs and other market participants building, record shorts. Now, this is not a makeup for the markets to actually go down. This is a makeup for markets to actually get support. And really, in the recent times, that support is playing out. Monies are coming in to buy. Maybe the shorts are getting covered, and markets are doing what they are. The flip side of this is that we don't know how a global turmoil situation can have a credit event. If there is no credit event globally, if the US Fed controls that, and the makeup remains as it is, this market has further legs. Other than the frontline index, in the broader markets, over the last 18 months, there has been a significant correction, and valuations are nowhere near as high as they were till about September 2021. Valuations have come up. So this is a nice makeup where you have growth, which is going to be strong, say, if not in the next 6 months, maybe next 12, 18 months. And valuations are reasonable here. I'm inclined to consider buying this market, building portfolios for returns in 24-25.
Where do you think the strength right now is unlikely to last, Anshul? Where do you think it's time to clean up? It's time to spring clean your portfolio and use strength to your advantage.
That is, you see, one is that all investors would need to be allocating capital into various asset classes. That is a very important asset allocation is a very important sort of portfolio building phenomenon that investors should follow. To that extent, holding some cash, holding some monies in defensive opportunities as the markets move up is always a prudent sort of way to go about building portfolios. And the other thing is that I'm not one for taking market calls. I think that in any market, you can always find 10, 15, 20 stocks, which you can build into a portfolio and ride them for the long term. Not take short-term calls, 3-6 months calls, but believe in India for a 5-year period, 10-year period with the money that you don't need immediately. If you can do that, then this is I think that the golden period for India is ahead of us. Look beyond the near term, immediate term, look into the long term, and you can't go wrong in India with the opportunities that this market throws. I'm one to believe that.
Okay. Anshul, we've got a discussion coming on the importance of ONDC, but prima facie from a market standpoint, if you have to really understand the implications of that, could this do to the delivery food e-commerce sector what UPI did to the banks?
Too early to say, Nikunj. I think that I don't really know whether this is a lasting sort of phenomenon or it is only a experiment, as you were mentioning earlier. If it is lasting, clearly it will have some impact on food delivery apps. But again, those apps have certain advantages, certain capabilities that they've built over the years. For instance, as you mentioned, their ability to provide food which is hot. That may not be an ability that ONDC may have. And as a result, while I, as a consumer, may test ONDC, if I get cold food, I'll shift back immediately to Zomato. Also, the efficiency of Zomato. I don't know if ONDC will be able to take that on in a seamless manner in short time. All of these things taken, I think that I'll have to test it over a certain period of time. I'll have to see this before I make a call on this.
Take the conversation forward. Abhishek Banerjee. Anshul, I'll pick it up from where Mike left. There is one sector which constantly disappoints, whether it is hot weather, cold weather, too much of rain, or global problem. It's the agrarian sector, whether it is UPL or Rallis or Tata Chemicals. This is one sector which had a lot of promise, but the promise somehow just does not get completed into a delivery. Even a stock like Advanta has struggled, Syngenta has struggled, Coromandel Fertilizer, top of the breed, that also has suffered.
Nikunj, this sector has many parts. One is, of course, the agrochemicals that you alluded to. Then there are, food-related sectors, sectors which benefit from food prices going up. For instance, sugar, and then there are users of agri commodities where agri prices being up hurt those sectors. For instance, FMCG. Now, in agrochem, there are many moving parts. If rains are scanty, you have volume pressures. If raw material prices go up, you have margin pressures. Everything has to fall in place for this space to actually show expanding ROEs. And as we all know, it is really that which leads to valuation uptick. Unless that happens, you will see cyclical moves and then reversion to the mean. Which is what we have seen in recent times. You and I have spoken about agri producers in the past, particularly sugar. I think that space is very sweetly poised, and both on account of pricing having upward pressure, as also the structure of the industry having improved because of the ethanol policy. We believe that this space is very attractively poised for times to come. Then, of course, the agri consumers. There again, if there are, for instance, we've seen wheat prices come off late from highs. We've also seen cotton prices come off of highs. Now, sectors which benefit from this will obviously be good to be considered for portfolios as we speak today. Now, that is the way I would look at it, not put this in one broad bucket, but split it into various buckets and see which bucket suits you at a given point in time for an investment.
Right, Anshul, great to have you on the show, and next time, hope to see you in green. On that note, we're going to take a very quick break.